Hello, trading is closed on September 27th. Today's September 28th, 2019. Go over our calls. This is a pattern with the early high. Next Monday, we also have a pattern with an early high. Because of the gap up, this target didn't have to print in its preferred time frame, which was yesterday, but it did. It's a new target for tomorrow. Unless we gap down smartly, that's my call. MEJT in the morning, so ultimately higher and lower targets would print. Typically when that happens, even if you get sharp moves, which you normally don't, it doesn't lead to anything. And you'll see at 11 o'clock Central Time, noon Eastern, you were pretty much within the reference bar, and all this rally and drop didn't lead to anything. The system said the rally was false and price would retrace. Said the smart drop was false and price would retrace. It's one of the advantages of the system. Even though it doesn't tell you exactly when to go short, it does tell you don't chase the rally. It doesn't tell you when to go long. It does tell you don't chase the decline. And even if you never make a trade, it stops you from chasing moves which aren't going to stick. The afternoon pattern is not conducive to a sustainable move. System calls for 29.6442. Unless we gap down smartly, that's my call for Monday. Here's what we said. We were looking for lower prices as long as recent highs held. 28.44 is a reasonable target. Breadth continues to have problems. Here's a chart of Exome Therapeutics. You can count 5 waves up, but if you didn't know Elliott, you would say this is pretty much a one-way chart. In spite of what the market was doing, kept going up and up and up, broke to a new high, and suddenly broke under this consolidation. So it's a one-way stock, which is now failing to maintain the uptrend. Just one more example that the market has some more work to do before the next rally leg starts. I think it will at some point. We undercut all the lows and then couldn't hold on to the drop. We had a rally like this, undercutting all the lows, couldn't hold on to them. Unless we invalidate this up move by taking out this low promptly, ideally by gapping under it. It means the market isn't ready to have a sustainable drop quite yet. The timing of this rally is actually favorable for the bulls because after dropping straight down on a Friday, you're going to find very few retail customers who want to go long. The implication is retail customers have been selling nonstop, and then there was no one left to sell. Well, this had been my count with this low on August 28th. I'm going to change it to the low being on August 23rd and go over the reasons that I'm making this end of Blue B. If it is the end of Blue B, this rally has a clear relationship. Purple C and Purple A have a clear Fibonacci relationship, and it suggests they're part of the same pattern, it's part of the same wave. And if that's true, wave Blue C should have some kind of relationship in terms of time and price to wave A, Blue A, and that looks a bit too short in terms of time, too short in terms of price to make the grade. Let's look at this last rally up. You can see a clear 5-wave pattern. Here's 1, 2, 3, 4, 5. You've got perfect fibs. And that implies we have to get 3 waves down. We'll come back to this wave in a minute. I do want to point out this was the all-time high. Here was the challenge. We've now closed under the low of the consolidation that featured the all-time high. Once we confirm this by trading under this number by 1 cent, it means this breakthrough attempt has not worked and that we have to drop lower before we make a breakthrough, which does work. Let's look at this wave down. For the short term at least, if that's A, black A, and that's B, there is a fib ratio, 61.8%, between this, which would be black C. So it's again evidence that this low is a good chance of holding. Doesn't mean we'll overtake this high, but there should be some more consolidating on the upside here. I'd like to thank everyone. I appreciate everyone who sends me thank yous in the email. It would help me if you would check like. If you find my videos helpful, it moves me up higher in the YouTube pecking order. Let's go over Monday. Monday's pattern has an early high, typical for the market to rally into the final hour, closed near the high. Failures is a straight line drop. Friday's close is positive short-term implications unless we invalidate it. By gapping and undercutting the day's low, we completed 3 waves down, recovered over prior lows, reversed to the time when retail customers were unlikely to be the ones pushing us up. There's a higher target, and if you don't gap down smartly, I think it'll print. Trading Monday may be subdued because of Rosh Hashanah. A lot of market participants won't be around. But yesterday's close does have negative implications for the longer term. We undercut the low of the consolidation, which had the all-time high. Confirmation is trading under the close by any amount. We have a working hypothesis. We're in wave blue C down. It'll have some relationship to wave blue A with a plausible target of 2844. Monday, we look for the pattern with the early high. Tends to be a rally day. Here's my target. I suspect we'll get more than that, but not a rally strong enough to take out recent highs, and that's today's call.